So, okay, switching between, yeah.
Thank you, Sarah.
Well, hello everybody. There are a couple of people online, and there are well, four of us in the homeroom. And I'm Megan Waller. I'm an agent here with Keller Williams, and today I'm very excited because my sweetheart is going to be the one that is going to be teaching the material. You know, a lot of the time I chat with agents, and there is quite a substantial amount of stress when it comes to tracking our finances and making sure that we are compliant and that we know what we're doing with our money. And for me, I don't even think about it. I don't worry about it, and that is because I've got Don in my life. And really what he's going to teach today is just how to create systems so that you too can get on with being an agent. Get on with doing what you love to do best, and that is negotiate deals and to have appointments, and so knowing that the money side of your business is taken care of. So this is Don Waller, and it's wonderful to have you here today.
Thanks, babe. Thank you. All right. Well, welcome everybody, and welcome to everyone online. I hope that you can hear me. We are recording this, so if there's any glitches, I'm sure that the technical team will send the whole recording out to everyone, and I'm sure that'll be available if you ask for it anyway. So it's a pleasure to be here. I am going to be speaking to you today about basically an income and expense tracking tool that is a very fancy sounding thing for a glorified spreadsheet, but I want to just full disclosure, I actually got this off the internet 10, 12 years ago from a guy who had made it available to anybody that wanted it. And I have basically, tweaked it over the years and revamped it to make it fit our needs as a family. And I've added some, I think, pretty cool functionality to it that wasn't there. So before that, let me just talk a little bit about why you should listen to me at all. So I want to stress right out of the gate that I am not an accountant. I have no training in accountancy. I'm actually a biochemist by training. And I'm not an expert on the CRA, although I have had some interactions with the CRA over the years, and so I've learned some stuff, okay? And I'm going to share that with you for free. I worked for over 40 years, actually, in the pharmaceutical and biotechnology industries. And in the course of doing that, I managed some pretty large budgets, up to $100 million per year. That was myself and my team was responsible for. So I'm used to managing large sums of money, so handling my wife's business is not that big a deal. I've been doing taxes actually ever since I was a teenager. I remember filling in the forms, tax forms by hand. I did a pencil copy so that I could, make changes and everything, and then I'd do the ink copy and I'd send it in. And so I learned how to do taxes. I learned the process, what you can do and not do. And, as time went on, of course, we had to get an accountant. Things got more complicated, but I work with the accountant very closely, and we kind of do it together now. As Megan said, I've been managing her realtor business for over 10 years now. And in the course of doing that, I realized that maybe I could help other realtors, okay? And I've also learned from her and through the grapevine that a number of realtors end up in the hospital during tax season, so I thought I'd try and mitigate that by giving you some help today. Okay, so let's talk about best practices. These are things that I recommend. You can completely ignore them if you want, or do it your way. It doesn't matter. I have no real skin in the game here, but as I say, I want to help you. So the first thing is that every receipt has a name. And what do I mean by that? As you'll see in a moment, we're going to look at the tool. And in the tool, there are categories for every single expense that you could reasonably ever see. I'm sure you'll think of one today that I haven't thought of, and that's fine. We can talk about that later. But when you get a receipt or an invoice from someone that's done, I don't know, some staging or photography or you name it, anything that they've done for you, you need to know what category that receipt belongs. You don't have to write the name on it, you'll know, but the idea is to think about your receipts and realize that none of them are just arbitrary. They have to have a name. They have to go onto this sheet somewhere, which means that you will physically type the amount into the spreadsheet for that receipt, and then you will file the receipt, okay? The second best practice is to stage your receipts when you get them. What do I mean by that? I mean that when you get a receipt, whether it's by email or physically in the mail or however you get it, you need to have a place where you put your receipts. Just every time you get one, it goes there. At home, I use a spike, a good old-fashioned spike. That's probably, I don't know, got from my father's ladies' wear store. It's got to be 80 years old. I don't know. But it works, you know, you just get the thing, you park it on there, and then when you're ready to process it, you take it off the spikes and you enter all those things into your spreadsheet, and then you file them in the appropriate file. So that's the process: stage, enter, file. Okay, so you need to have a filing system, obviously, where you're going to put all these things. So you move your receipts from the staged place. It might just be a clip hanging on a corkboard in your office, whatever. It doesn't matter, as long as it always goes to that same place. You don't have receipts here and some in your car and, you know, some in your handbag. And no, if you get a receipt, it goes to the clip. Okay, and the reason for that is that way you don't forget it, because all of these receipts represent money back for your business. Do you understand why? It's because it's an expense. And if you forget an expense, then you're basically telling the CRA, hey, I made X amount of money, here's my expenses. Oh, but sorry, I forgot 10 of them, so you're going to pay more tax. So every time you can claim an expense, you're reducing your tax burden, okay? Pretty straightforward. Okay, so your trades. When you get a trade, everybody gets the same, I believe, the same form here at Keller. It's a two-sided thing, printed out, okay? And that gets filed once you've loaded it into the system, into your income file, okay? And then all your expenses you can put into what I call just direct expenses file. I also have a file folder for car expenses, but over the years I've stopped using that. I just put it in my normal folder for our cars, and then if I need to go back, I can get those. It's up to you. Things like your cell phone, your internet costs, your vehicle costs, your home expenses, you can file those wherever is convenient for you. So if you have a regular place where you put your gas bills and your internet bills, that's fine. But just make sure that they go on the clip first before you file them there, because they need to be entered into the tool, okay? And then the last thing there is adding notes to your spreadsheet cells in order to delineate expenses for a specific property. One of the questions that I'm sure people will have is, well, how can I tell how much money I spent on a given deal, a given trade? And I haven't really set up the spreadsheet by property so that you can just, you know, click a button and there's your answer. You'd have to just run through your expenses and look for those notes to say, oh, I spent $1,000 on staging for, you know, 123 Small Street or whatever it is. And I'm going to show you how I do that in a moment. Okay. So let's see here. All right, so now we're going to look at the tool. So we're going to switch to screens. So just bear with us while we do that. Oh, you need that, don't you?
Yeah.
Great. Thanks very much. That's super. Okay, so this is the tool, and it's basically a spreadsheet. I'm just going to reduce it here a little bit so you can see a little bit more of it. There we go. All right. So right at the top, you'll notice here that this is the year. It's 2026, obviously, and that's something that you, when at the end of 2025, you would have saved it as 2026 and then deleted all the data out of it manually to get it ready for this year. It's the income, expense, and HST summary for your name. Okay, you can enter it in there. And it's for this period, from the 1st of January to the end of, basically for the calendar year. Don't worry about this box for now. But as we go down here, you'll see that there's a sheet here that everything is summarized. And all the numbers for all your expenses are collated here in this one page which you can give to your accountant. And that's really the power of this tool, is that it's literally one page where your accountant can see, you know, what you spent on all these different categories, because then they can allocate them into your business statement for tax purposes. So I will run through some of these and show you how they work, but you'll notice a couple of them are grayed out, which means that these are the ones that there's no HST. So I've actually created columns where HST, you're paying, the HST has been paid by the vendor and when you've paid them, and others where there's no HST involved. You have lots of people out there who, for example, you know, the rule is that you have to start paying HST or charging HST once your income exceeds $30,000 per annum. So as long as you can keep it under the 30,000, then they won't charge you HST. So those categories exist for that reason. So this tool separates it all out for you. You'll notice that at the bottom of this, where's my, anybody see my, oh, there it is. So if I go down here, you'll see that there's a place where your HST installments that you pay and your income tax installments that you pay, you can record here, so you have a running total. So I don't know about those of you here in the room, but normally if you're an agent that makes any money at all, you're going to have to pay your income tax installments quarterly, okay? And they're normally due on the 15th of the month. So that means you want to pay them about a week before, because if you wait till the day, then they're going to start charging you interest for a late payment. So I always put in these dates on the 8th of the month that they're due. And that's a trigger for me. And then I put it into my calendar as well. Income tax installment due. HST installment due. HST installments are due in the month following the quarter that you earned your HST. Now, some of you might be annual filers. Some of you might be annual payers. I don't know how you've set it up with CRA. Everybody's different. Megan is set up to pay her HST quarterly, but only report annually. So we find that that works. Now, why do we have these here? The reason is because you can see how much, as you go down through the year, what you've paid, and you can start to think about, well, am I paying the right amount in terms of installments? The biggest challenge that I've found over the years as for a real estate agent is, how do you know how much money you're going to make this year? Does anybody here know exactly how much you're going to make? Yeah, nobody's nodding their heads. And it is a big challenge. And you know, you are not salaried employees, and so you have no way to predict what your tax burden is going to be. But what you do have is some history. So you know that in 5 years ago, let's say it was, you know, 2021, or go back to 2018, whatever, go back as far as you can. How much money did you earn? How much tax did you pay? You should be able to look that up from your tax returns. And you can go, oh, okay, so I earned this amount and my taxes were essentially 20% or 15% or 12%, whatever it was of your full gross amount, okay? And then you get an idea. So now, and I have it all graphed at home. I've got it on another spreadsheet where it's like, here's the income and here's the tax paid. So that if you want to start to estimate, you know, in a given year and say, well, I think this year I'm going to do, you know, this much, then you have an idea of how much of an installment you should pay. The problem is, if you pay too little, they will charge you. If it turns out you should have paid more, they'll charge you a penalty. The CRA will. If you charge too much, or you give them too much too soon, then they don't give you anything for it. You get no benefit, okay? Welcome to Canada. So this is a challenge, and you can work with your accountant to kind of figure it out and say, well, what do you think I should pay? Now, keep in mind that when you get your installment payment requests from CRA, they're always for 2 years back, because that's the one they have the record for. You won't have processed last year's taxes yet. So when they send you an installment reminder, how many of you have got those installment reminders from CRA? And it says, you know, you got to pay this amount. That's based on 2024, okay? So you already know what 2025 was, and you will have an idea of, oh yeah, I'm going to get a big refund, or I'm going to have to pay a lot of tax. And so you have to figure it out, how much you're going to pay. But the beauty is, there's a place here where you can put it. While we're here, there's also a place for your car. So you can put whatever car you're driving here, and you can record your odometer reading on the 1st of January and on the 31st of December, and it'll calculate the total kilometers for you, the total kilometers. And then just up here, there's a place for your car where it will take those kilometers and it will assess the claim you can make based on the business percentage that you enter, which you can put any number you want. So as you know, you should, as an agent, be tracking your mileage for business purposes so that if CRA ever asks you, you can answer the question. You can say, well, here's my records. And my understanding is there's some really cool apps out there that you can use on your phone. Every time you get in the car to do a business trip, you just tap, business or whatever. The other option is to forget about all that, take a chance, and just hope that they don't ask, hope is not a strategy, but that's up to you. The key here is that percentage is, again, up to you. How much do you think you use your car for business purposes? Realtors typically are very high. I know some realtors are charging 100%. They just go, 100% of my is business, which is kind of a hard sell with CRA. I wouldn't recommend that. You typically want to drop it a little bit at least so that you're being honest about your driving, because nobody works 100% for business. I wouldn't put 30% either, because you spend way more time in your car than 30% for your business travel. So full disclosure, that's what Megan uses, and it's been fine over the years. The other area here is your at-home expenses and equipment purchases. I'll talk about this in a moment. For your at-home expenses, again, you can charge a portion of your home for business purposes. And again, the typical acceptable percentage that CRA will allow is normally around 10%. So if you're using a tiny little closet in a 5,000 square foot home to do your business and you ever got audited, you'd have a hard time selling that. But most people don't. Most people live in a normal home and they have an office area, and that office area has certain square footage, and you can easily say, yeah, it's 10%, and a CRA typically won't blink. But that is not an official position. I'm just telling you what I've learned over the years. Okay, so normally 10% there works well. These percentages automatically calculate whatever your absolute expenses are for these areas. So as we'll see in a moment, your heat, your water, your hydro, all shows up here as you enter it in the other place in the spreadsheet. Your repairs and your maintenance, your insurance, your mortgage interest, if you have a mortgage, rental or property taxes, if you're renting or whatever. All of these things get inherited here in this area. Same thing in the equipment area. If you have computer equipment, you buy a computer or software, or you buy equipment or furniture for use at home for your business. You can depreciate that, and this is where your accountant will want to see this, is because now it's not just claiming those expenses, but it's actually depreciating them, which is a bigger advantage to you to depreciate than to just claim it as an expense, because there's multiple years you get to do that for. Okay? All right. So let's go back to this area here. Is everybody seeing this okay? Yeah, sure. Go for it. We're just taking a brief check that this is working here. Yes, I can make it available to you. Absolutely. Too bad we can't hear. Yeah, is there anybody that could go off mute just for a moment and tell us if you can see the screen, see the spreadsheet?
Yes, we can see it now.
Oh, now
Okay.
it's up. Yeah, thank you.
Sorry about that. I just need the mouse back. If I can get the mouse back. That's okay. We've had some technical difficulties today, which is par for the course, it seems. All right. So this is the sort of central area of the spreadsheet. And just to go through these lists quickly, and then I'll show you where they come from. Your monthly broker expenses, your gifts and promotions, training, seminars, conventions, delivery and courier, taxis that might be you sending stuff, all your dues, your RICO, your TREB, Korea, ORIA, all these fees are all inherited here. Entertainment and meals at 100%. These are business meals. Accounting and legal fees. So when you see your accountant, normally there's a fee, obviously, for doing your accountancy that gets entered here. Office supplies, postage, pens, just all the rubbish you need to do your business at home. You put in. Marketing and advertising. There's an area for all of that. Your MPAC reports are all captured here, so you can enter each of those as you get them. They're not a lot, but they add up if you're doing a number of them. Your cell phone, the internet, travel at 100% of meals. This is where you are traveling, and you get to claim all your meals. Your accountant's still going to have to reduce those per CRA rules, but claim the whole thing. All your hotel fare, costs, and any airfares go in here. This is for travel to wherever you might need to travel, not including conventions. Those are separate. Miscellaneous 2 is basically for just little things like, one of the things I did was I put tips in here because when you go out and you have lunch with a client or whatever, the tip can be substantial, but the tip doesn't include HST. So it's a non-HST item, so I just collect all the tips here, and they can add up sometimes to, hundreds of dollars. This is your conventions that are non-HST, training, non-HST, which a lot of it is. Your staging fees typically are not HST. Casual labor, let's say you pay somebody, $50 or $100 to do something for you, put it in here. Consulting services. This is where if you want to do income splitting and you have your husband do what I do for Megan, he can charge you an amount for consulting to you, and you can take it off as a consulting fee. Okay. You can't go crazy with this. It's got to be reasonable. You can't have, there's been a number of cases with CRA where the husband was charging the wife like $300,000 a year to do essentially bookkeeping. And the CRA said, well, we don't think so. And he lost that case. So it's got to be reasonable. Okay. But you can do it. There's nothing illegal or wrong about it. Okay. So where do these numbers come from? So you'll see here that if I go across on this spreadsheet, I'm just going to put this here. If I go across, let me just select a cell here. Here we go. Whoopsie. Yeah, see, now I got a problem. Okay, let's do it this way. Let's go up. All right, here we go. So here are the columns. So there's a bunch of columns here to the right. And you'll notice that these columns have the exact same names here. Monthly broker expenses, you'll notice, is column 3, and there it is over there. Column 3, monthly broker expenses, okay? So it's inheriting whatever is in this column, it's going to show up over here, okay? Automatically. So you only have to enter it once. So if we continue across, you see you got gifts and promotion, training, seminars, delivery dues, RICO, TREB. Here they all are. Here's all these expenses. And you'll notice a couple of cells have got some notes in there for you. So for example, you can reserve this cell for your annual website costs. So if you run a website and it costs you X amount per month, don't worry about recording that every month. Just add it up at the end of the year. Here's the total for my web costs. You can just put it in that cell and that's it. So if you see a yellow cell like this, just look at the note and there'll be a little sort of helpful thing there to tell you what's that for. Cell phone, here's again, you want to reserve this cell for your annual cloud storage. So if you have cloud storage for your phone, which most of us do, that's a business expense. You can just put that cost in there, okay? The annual cost. I think We pay, I think it's $4.50 a month for that. So you don't have to put 450 for every time for each month. Just put the annual costs, okay? Internet costs, you can put those in per month because sometimes they go up and down. Here's your travel. Here's all those miscellaneous ones. You'll notice they're gray here, just like they are on the main part of the sheet. You can put all these costs in here. Here's your vehicle. So all your costs, your gas, your oil, washes, parking, all goes in that, in these columns here. Now this one here is a little interesting. You'll notice this purple column. I put the 407, any 407 costs I put in purple. I put any repairs in blue, and I put any parking in green. I just color the cells manually. And the reason I do that is on your statement of business income that your accountant does, all three of those are separated. And so if you sit with your accountant, he's going to go, well, how much did you spend on your repairs? How much did you spend on parking? And you have to know what those are, okay? So what I do is I just color them, and then I just do a manual add and put the figure at the bottom of this column. So when I sit with them, I can go through that. Your insurance, your license, there's no license fees anymore, but there used to be. Here's your equipment, your computer equipment. So if you buy a new, laptop or whatever, a new printer, you can put that in here. If you buy some fancy software, you can put it in there. And then here's your home stuff. So heat, water, hydro, repairs and maintenance that are relative to your business. So in other words, this is not where you get to put your the latest wing that you put on the house because you wanted to add 500 square feet to your house. This is not where you put your $10,000 gardening fees and stuff like that. It has to be reasonable, but you can charge some things. Your mortgage and that, and then here this last cell is just where you put your annual property taxes that you pay. You don't have to put them in monthly. You can just put in the annual figure. Okay, now that's your expenses. Now, what about your commissions? So so I got to there by clicking on this tab called Comms Deductions. So this here is the annual sheet, right? And then here's the Comms and Deductions sheet. This is where you put your commissions, and it automatically calculates all of your costs and deductions from your commissions, and you should be able to correlate this to literally to the check that you get from Keller. So I made these up, obviously. This is deal number one. Now, the first thing you'll notice here is that there's 4 colored areas, and that's because these are in quarters. So all of your deals that fall into January, February, March all go into the green area. If you need more lines, you have to select the line and you have to say, insert a new line. And it'll do that for you automatically. Don't worry if you have too many lines, it doesn't matter. It's going to just total it all at the bottom. You can have blank lines, that's okay. But this is the separation by quarter. And the reason it's separated by quarter will be obvious in just a moment. It's related to your HST. Okay, so let's go back up here. So here's 123 ABC Lane. The closing date was the 29th of January 26, which you get from your final documentation. And the closing date's important because the closing date is when you got paid. So this is set up that you pay taxes, your HST, based on when money actually flowed to you, okay? And that's just the simplest way to do it. So if this deal was on the 31st of December, then it's in last year, okay? Anything that falls from January 1st to the 31st of March is quarter one. You got paid $12,000 commission, and then these columns calculate everything for you. How do they do that? Well, you'll notice if I click in this cell that there's a formula there in the formula bar that says that it's this cell here times 0.3. And this is where you put your split. So whatever your split is, your arrangement with Keller, you need to put that number in this formula here. Change it to whatever it is. I don't know what all the splits are, but I just picked 0.3 as an example. So that's your 30-70 split, okay? So it calculates 30% of the commission is the brokerage fee. And then that's the amount remaining, which is the agent portion. And then there's a royalty based on 6%, which is the normal transaction. And that gives you a new subtotal. And then, if we keep going to the right, you have a total column for all your deductions here. And that leaves a taxable amount here. Okay? Then you pay HST on that taxable amount. And you get paid that. Sorry, you don't pay the HST. Keller pays the HST. So that's the check that you get. So when you get your EFT, if you look on the other side of the transaction sheet, you'll see the electronic funds transfer. It should be that exact number to the cent. And if it's not, then there's something, you've got something wrong to the left here. Either your split's wrong, or maybe there was no commission, or sorry, no royalty, or whatever, okay? And so I've done some other things here which will help you. So the question is, the big challenge that realtors have, and maybe this is the sort of gem of this whole talk, is how do I save for taxes? How do I make sure that I don't get to the end of the year having spent all the money I earned and I've got nothing left for taxes and now I'm really in the dwang? So this is how you do it. You get paid this amount, and what I've done is I've put in a formula here which basically says I'm going to save 20% of what I get paid for my income tax, and I'm going to save 8.8% for my HST. Now, why the 8.8%? Most real estate agents use what we call the simple method for accounting for HST. Have you guys ever heard of that? The simple method versus the normal method? The normal method is where you literally track every single cent of HST you pay, and then your accountant uses that for something called an input tax credit, and you get that money back for things that you've bought against the HST that you owe, okay? It's a much more complex way to do it. Most agents don't want to go through all that hassle of having to track all of that stuff, although this sheet will actually help you to do that. So they just use the simple method, and the simple method is straightforward. The first $30,000 of income that you make, that's sales, like straight commissions, 30,000, you pay 7.8% on that 30,000 in HST. Now, the HST that you got from Keller, okay, that they paid on your behalf was 13%. So you're only being asked to pay 7.8%. So it sounds like you're making some money, and you do make a little bit, but when you do your filing your taxes, the government knows that you were paid 13, you only paid them 7.8, so they're going to recoup a lot of the difference. But it gets a little fuzzy there. But it's not a bad deal. You don't get you don't make money, but it certainly makes everything simple, and that's why they call it the simple method. So it's only on the first 30,000 is 7.8, then the balance is 8.8%. So it changes after 30,000, you pay more. So the reason I put 8.8 is it's just that little bit of additional savings, okay? It's like 1%, but it's additional forced savings for you. Now, where do you set here? What is this? This is the big number you want to worry about, is this 0.2 up here, because everything you earn, you're going to put away, and you're going to pretend you don't have it, okay? And I'll tell you how we do that in a moment. But basically, you want to take this money out of your bank account and put it somewhere else where it's safe, so that it's there for you when you have to pay during tax season, which will be in April for most people of the following year that you earned these commissions. So 20% is based on just a guess, okay, of what the income is going to be for you. And you can change this. You can change it, down to 10%, 15%, 20, 25%. If you're an agent that's earning, $300,000-$400,000 a year, then you're going to want to bump this, because obviously you're going to pay more tax. And as you know, in Canada, we have a sliding scale for income, right? The more money you make, the more they take. So the idea is to make sure that you have those funds available. Now, here's the beauty. If you get a refund and you don't have to put any more money in, and you've got some money sitting in this little place where you hide it, then guess what? You have money you didn't know you had. And it can really be a blessing for you for all kinds of reasons. This field here is where you put in, what day did I put the money in? When did I do this? It forces you to put a date because that way you can't forget. If you go back and see that there's dates here missing, it means, oh, did I do it? Did I actually move that money somewhere? So where do you move it? So in our case, we put it into basically a high interest savings account with the bank. Why that? Why not into the stock market? Well, because you're playing with tax money and you don't want to see that disappear. You can do way better than your average savings account with the bank. So if you're with, let's say, TD, for example, you've got TD Web Broker, you've got some of the higher end TD Waterhouse, where you can avail yourself of these high interest savings accounts, which pay way more than just your average, garden variety savings account, and that's a good place to put it. You can put it into the money market. It's also reasonably safe there, I would argue. And you get a little bit of interest for which you're going to pay taxes, but you're making money. So what it does is it puts it in an account now where that's my tax money. That is my tax money. I pay my HST. When HST, the quarter comes, you're not scrambling to look for it. It's already there. Why? Because you took the 8.8%. It's embedded in that, right? And when the income tax comes, you've got that too. And all you do is just transfer that money back into your account, pay your bill, and you're good. Okay? So this tells you your income remaining. And then I've gone a little further here for people that want to. This is a calculation of how much you had left and then your business expenses, like how much did you spend on your deals on average? And so I've used 10% here. And then this column here, if you give to charity, for example, and you want to do that on a regular basis, it automatically calculates that for you as well. It says, okay, well, if you want to give to charity based on that deal, then here's the amount you would give. When did you give it? And how much did you actually give? Because normally I just round this up to whatever, it's going to be. So those are just some additional columns. You can ignore those if you want, but they're just there for your convenience. Now, here's the interesting part of this. So when you get over here, this is your HST section. So as you get all these deals and they flow, the total sales for the quarter is calculated for you right here. So you can see this is the sum of a whole bunch of lines, all the lines that are green, okay? This then calculates how much HST you owe. And if you'll notice, there's a pretty complicated formula here that does the calculation for you. But essentially, what it does is it looks at the value and it says, is it less than 30,000? Okay, if it's less than 30,000, then report back at 7.8%, which is what this number is. This is 7.8% of that, okay? If it's more than 30,000, then it says, okay, take 30,000 off the number, calculate 7.8% of that, and then for the balance, calculate 8.8%, and then sum everything. So it does that all automatically. It tells you the quarter, and then it tells you what you need to remit. So this number here is the amount of HST that you owe for that quarter. Now the question is that what you send to the government, or should you send more or less? The principle I use is that if it's less than a quarter of last year's, then I'll just send it automatically. But if you think you're going to do more this year than last year, then you actually want to pay a little bit more HST than you actually, should. And the reason is because, again, they treat it the same as income tax. If they look at your annual filing and they didn't get their exact 1 quarter every quarter for your annual figure, they're going to go back and go, oh, well, in quarter 1, you only gave us $1,000. Yeah, but I only did $1,000 of HST. And they're going to say, well, it doesn't matter. You should have given us a quarter of your total. So if you end up paying HST of $20,000, then they want to see $5,000 a quarter. Okay? So this is where you say, well, how much did I actually remit? And you'll notice that by the time you get down here, it will have calculated down here the total you actually owed. And here, you'll know that at that point, you've paid almost all of that and you're only like $100 short. So obviously in the final one, you just pay so that these two numbers are equal, okay? So you never overpay what you actually should pay. You get by the fourth quarter, you know, and so now you can make it equal. All right, what else can I show you here? Yeah, so there's your HST quick method, 7.8 and 8.8, okay? Now, here's the thing where it gets a little bit interesting. I'm just going to come back here. These brokerage fees, again, are based on your split. And as you know, everybody in the room and everybody online has a different date for when you cap. So this particular formula here, the 0.3, based on whatever's in the commission column, if you come down here, you'll notice I got a little note here. It says no cap percentage entered from this point forward will depend on your unique situation. So that's an arbitrary place. You might cap back here in the second quarter. You might not cap until the fourth quarter. I don't know when you're going to cap. But when you do, this calculation is going to be incorrect. It's going to be less than 0.3. So let's say you are $100 short of your cap, let's just say, right here, the last deal you did, which is in the second quarter. Let's say it's sometime in May or June, and you're $100 short of your cap. The deal before, full 30%, absolutely. But on this deal, you start to enter it manually, because now you have to say, well, some of it was taken by Keller, but most of it wasn't. And so how much was taken? And you just enter that amount manually in that cell for that deal. And you make a little note in your spreadsheet. Yeah, capped here, and that's why it stopped. So from then on, you make this formula 0. So you have to kind of know a little bit of Excel, how to use it. But from that point, these will all be zeros, because there's no more money coming off your deals. Is that clear? I see some heads nodding, so that's good. Same thing with the royalty, right? So I made a note here, no royalty fee entered from this point. It'll be the same as your cap. The deal that you cap or almost cap at is where you stop paying those royalties, okay? So again, from that point on, you're going to want to zero the formula here, get rid of the 0.6. So you notice that's 0, and this one here is still 0.06, okay? So pretty straightforward, but just to be aware of that, it depends on your situation. And then last but not least, I've got an area here for conventions. So if you go to family reunion, for example, it's a place for the dates, and then the travel, you've got your different travel items, your airfare here, maybe your cab to the airport, whatever it is, to put your amounts in here, any notes you want to make about that. It'll automatically calculate the subtotal for your travel, and then your meals and all the other stuff. If you buy some, I don't know, you buy a Keller Williams water bottle or whatever you buy, what do they call it? The red gear stuff? Swag. Yeah, swag, yeah. You put all those items here, and again, they subtotal all that, and then the total appears up here, okay? And then if you go back to the main spreadsheet, you'll see that there's a place where that figure, way back here, where was it? Oh, it's earlier on, I think. Yeah, here. This cell here is inherited from that spreadsheet. So I've made a note here that says this cell is for the total of any convention costs. If I can just hold still long enough. Airfare, hotels, meals, everything is calculated on the convention sheet, and it's inherited here automatically. So don't enter a value here, because you'll wreck the link. All of those cells where that's inherited, most of them anyway, are colored. So it's kind of a flag for you. Okay, that's it, I think. I know that's a lot. You probably feel like you're drinking from a fire hose. And I'm sorry about that, but this is really just an overview. The spreadsheet itself, I didn't, I got it for free and I give it away. So it's like it's available, whoever wants it. I guess we'll have to figure out how best to get it to you. There's several ways. I mean, if 100 agents want this, then I don't want 100 emails, but I don't know how. Yeah, well, Yeah, so if we switch back to the other screen there, then my details are there, so if people can make a note of it. Oh, you're going to need that. Sorry, thanks. To the PowerPoint. Yeah, that's it. And then we'll just go down to the next. Actually, I can do it. There we go. There we are. And then we can just run it. Just run the slideshow. Do you see if you bring me the mouse back, I'll play with that. Yep, I'm going to do questions right now. And then people can come off mute as well. So I just want to make this a little bigger for everybody so they can see it. Okay. Yeah, there we go. That's what I wanted to do. So you can reach out to me. I would request maybe initially by email, and then I'll send you the spreadsheet. And if you have questions about it, then you can email me or call me. Calling's probably easier. If you really like this and you want to use it and you want to go forward and you just want some help to get initially set up in that, I am willing to come for a small fee to come to your house and get you all set up and get everything organized for you, and then you can run with it. And if you have questions along the way, you can always contact me. That's assuming you don't live in Belleville. So, all right. So I'm happy to take any questions that you might have at this point in time. Maybe we can start with the room and then go online. Yeah, they come off mute if they have a question. So we'll start in the room. We'll start in the room here and then take a question, and then we'll switch to the online people. So does anybody here have a question? What was that?
So in our house, sometimes I use my own car, sometimes I end up taking my husband's vehicle. I do track all the mileage of the vehicle I'm in.
Yep.
On the spreadsheet, could we allow for 2 vehicles in there? Would that be an easy addition?
So you need to speak to your accountant about that. My understanding from my accountant is that CRA likes to know which car is your business car. For the reason that vehicle is depreciated, it's a big part of your taxes is you get to depreciate your car. So if you're using your business car, most of the time, and then occasionally use your husband's car, then that's no big deal. Just record the mileage as if you were in your car. That's not going to be an issue because they don't know what car you're driving, right? But the idea is clearly, you don't want to be deceitful or anything. So it's okay to do that occasionally. But if you're actually depreciating car A, but driving, another car and claiming the mileage on that, then it's going to be hard for your accountant to justify the depreciation because you're not putting any miles on it. So why is it depreciating? So yeah, so I think there's flexibility there, but just don't make a habit of it. Yeah, there's an area there for leasing. You put the leasing cost right in. Yeah. Sure. Yeah, I'm sure it is. Just remember that the power of this is that, I understand you're overwhelmed because it's the first time you're seeing it, but once you get it on your computer and a receipt comes in, you just go, oh, I have a receipt. It's really easy. It's like, okay, what is this receipt? Okay, it goes here, and then I put it in my spreadsheet, and then I file it. And then it's like, put it in here, put it in, file it. And all of a sudden, it's just a nice flow, and you don't overwhelm. What I have heard is that some agents collect all their receipts for a year, and then they go into their accountant, they hand them to their accountant, and then they get billed for thousands. Why? Because the accountant's going through, fuel slips, hundreds of whatever. Like, you don't want that. You don't want that. You're paying somebody a lot of money to go through your receipts. If you do that and you give them that spreadsheet, it's like they're going to go, woo, it's Christmas. And then And yeah, well, not quite, but yeah, they'll certainly be happy. So yeah, it's definitely one of those things. It's like cleaning your house. If you leave it too long, it's a big mission. But if you just keep at it, it's no big deal. Well, I think days at the spa are probably not expensive. I don't know. Like, what do you having in mind? What do you have in mind?
Take your client to use the spa.
Yeah,
Thing that is related to your business.
yeah. Anything that's realty expense, related, anything. It's. Yeah, well, this is partly why I wanted to do this, because I'm pretty sure you're right. You're missing a lot of expenses, and every expense you miss is taxes you pay, because it's right off the bottom line, right? What you can't, what you can't do is you can't charge things like, or you shouldn't. Let me rephrase that. There are things you shouldn't charge, and that's your regular like home consumables. So I know that some businesses, real estate people, self-employed people, they put through all their bills for, toilet paper and whatever, they're running through at home. And it's like, you're not really supposed to do that. Some people do it and they get away with it, but if you get caught, then, the key is, it's just don't get audited. You just don't want to get audited. So, don't give them a penny more than you need to, but don't try and cheat CRA, because it'll catch up with you. That's just a personal comment. It's just not worth it. They have a way of making your life hell, and they have way more lawyers than you do. So let's take some questions from online folk. If you want to ask a question, just go off mute and ask your question.
Thank you. It's Leslie. And the question I have is, when I kind of got a little bit lost when you were saying about the HST, I thought, and I'm a person that does everything at the end of the year. So I thought whatever we've paid in HST, we subtract, the exact amount that from our bills, and then that's what we owe them. But I'm not sure, I'm not following the 8%. So am I overpaying?
Okay, so if you're using the simple method,
Okay.
okay, so I want to stress that. If you're using the simple method, you need to contact your accountant and ask them, what method am I using for HST? And if he says you're using the normal general method, which is input tax credits, then you want to track all your expenses and all the HST that's associated with it. This tool does that for you.
Okay.
But in terms of paying your HST, if you're a quarterly payer, you have to estimate what your annual is going to be. If you only pay annually, Leslie, then you don't need to worry. You're just going to file at the end of the year, and you're going to pay at the end of the year, and that's it. So if you're set up to do that, that's fine. But my understanding, correct me if I'm wrong, is that if you're a real estate agent making any kind of money at all, especially more than 30,000, which is not a lot, then you should be paying HST quarterly. Whether you file quarterly or file annually, that's a different story. So check with your accountant,
Okay.
and you can show them, this tool and say, how should I do my HST? And but it really comes down to whether you're using the simple method or the standard method.
I see. Okay. Thank you. And thank you so much for doing this. This has been it's awesome. Thank you.
You're very welcome. It's called the simple method because it's simpler. Sorry, I'm not being cute. That's just really the reason it's called that, is it just simplifies everything. You're not having to track, okay, so for this deal, I got paid X amount of HST by Keller. All right, so the stager charged me this much HST, and the photographer charged me that much HST, and now you got to add all those up, and then your accountant has to take all of that and file an input tax credit, an ITC, against what you got paid, and then the difference is what you pay. If you do that over time, guess what it works out to? It works out to about 8% over time that you actually pay, because you've got your cost of running the business. So what the government does is they say, look, for small businesses, which most realtors are, it's just a lot easier to just say, give us 7.8% of your first $30,000 in sales and give us 8.8% of the rest of your sales above 30,000 and we're happy. Okay? Any other questions from online? Anyone? Just come off mute and you can ask your question. Going once? Maybe you're struggling to find the unmute button. Yeah, obviously, if you want to think about this and get a hold of me for the spreadsheet and then have questions, by all means, you've got my number and my email there. Just do me a favor, if you send me an email so it doesn't go to spam, just put something in there that I'll know that you're a Keller agent, and then I'll be sure to prioritize answering you. Okay. Yeah. I mean, it's inevitable you get something, and I'm sure you'll say, "Where do I put this, Don?" I'll go, "Gee, that's a good one. I've never." You can kind of put things in columns where it doesn't really matter, but if it's something that's going to happen on a regular basis, we might need to insert a new column just for you, for your unique situation, which we can do. That's no problem. I can do that remotely and send it back to you. Yeah. Okay, so unless there's no further questions, I guess we're actually bang on time, exactly 3. We had another 30 minutes for questions, but if you do, like I say, just feel free to reach out. Otherwise, thank you very much. Appreciate the time, and I hope it was helpful. Okay, we're going to end the Zoom call now. You can do that.
Gotcha, husband. Only I do know I think I have to be a little bit more organized like this because usually when it's tax time and he has to do it, then he asks me for all that stuff.